let's connect the volatility in bonds and yields to the volatility in stocks. And Scott Bauer, CEO of Prosper Trading Academy, thanks as always for joining us. It's very interesting. Year to date, you have the S&P 500 down, you have the VIX higher, and you have that 10-year yield backing up, I think at this point about 50 basis points, an extraordinary move in such a short period of time. What do you think that this suggests is ahead?
Not just the 10-year yield. Look at what's happened to the 2-year as well just in the last week or two. So you're right. The volatility that we're seeing across the bond space is the highest it's been in about a year. And I think what you're seeing with the longer end, and I'm focusing in on like the 10, the 20 as compared to the real short end. I think what's happening is you're seeing some pressure there compared to the short end because of this flattening of the curve that we're seeing. I expect that to normalize a bit, Abigail. I expect that to widen back out. So I think moving forward, whether it's a matter of weeks, maybe a month or 2 months, I think that's going to widen out. And I think that benefits one of the ETFs that I watch real closely is the TLT, which is the 20-year bond ETF.
So talk to us pretty specifically in terms of what you expect for that widening, to what degree, and in terms of the TLT, what kind of move you think you could see?
Sure. So the TLT is directly related to the 20-year. It does track the 10-year pretty closely. And we've seen pressure on this really over the last several weeks here as the spread between the 2 and the 10 has really consolidated. Again, I think that's going to normalize. I think TLT, there's a lot of room to the upside here. So what I'm looking to do based on that massive volatility that you and I were just talking about is sell some put spreads in TLT. So I'm going out about a month or so. I'm going to sell like the March 135, 130 put spread. There's a lot of premium in that. There's a lot of support in TLT around the 134, 135 area. I think that can be a really, really positive way to play the volatility in the bond market.
And of course, as you know, it's always a cross-asset picture. And this year, it's so hard to know what is the head of the dog and what is the middle of the body and the tail. What do you think all this means if it happens for stocks?
You know, I think the stock market has shown that it can digest and it can handle a 2% 10-year. What is the wild card is what is the Fed going to do? And I think they just need to do it already. And once they make that decision, especially with the March move, whether it's 25 or 50 basis points, I think that's actually a positive for the stock market because the stock market does not like uncertainty. Uncertainty begets volatility. Once that decision is made, whatever that decision is, I think we can actually rally from that point.
Well, it's very interesting that you're saying that because, of course, the S&P 500 stuck in a trading range over the last 6 months. And a trading range is never all that interesting in of itself, sometimes painful for traders, but it's that direction that it breaks to, up or down. It sounds like you think it could be a big move to the upside. Scott Bauer, CEO of Prosper Trading Academy, thank you for joining us for Options Insight today. Taylor, back to you.
Thank you as always.